Guys, welcome back on the channel. Listen up. When we're looking at trading in the beginning, people struggle with two things. One, consistency. Two, patience for the right setup. If you watch this entire video until the end, two of those problems will be solved, okay? I made an entire overview of what we are going to cover in this video, so watch it until the end. If you're new to the channel, by the way, and you don't know me yet, my name is Camille. I also go by the name of Trading Wizard, and online I share the reality of day trading. I made more than 950x in the markets itself, and now I want to show what the reality is. Instead of all of the free signals, all of the call groups, and all of the nonsense, I'm showing you what it really takes if you want to make money in this space. So, first of all, let's start. How to build consistency and have self-control to wait for the right setup. The market rewards patience, not activity. When you're looking at literally the business model of trading, it's two things, okay? Split in 50-50. It's money at risk and it's patience, okay? If you want to get rid of patience in trading, you're basically getting rid of 50% of the business model. Does it make sense? Most probably not, okay? So in this video, we are going to cover a couple of things. One, the illusion of activity. Two, why overtrading destroys consistency. Three, patience as a trader edge. Then we have building discipline through control. Less is more, quality over quantity. At the end, I will give you some action steps as well, so you can directly implement this in your own trading. Now, let's start off with the first one. And the first one is a very important one. The illusion of activity. This is where for most people, they make the first big mistakes. They look online and they look at some traders and they think, okay, this free signal guy, he most probably is a real trader because he has my dream car, he has my dream watch, and now I want to do the same thing. They see that they do 5 to 10 trades a day, okay? And they think, okay, that is what trading is. They look at the Wolf of Wall Street, they think that they are actually trading. They think, okay, they're screaming behind the screen and they're working 24/7. This is not true. The reality of trading is almost the opposite, okay? Most of the time, less is more. The less trades you take, the more quality they are, the better you will become as a trader. So it may feel very productive when you take a lot of trades, but most of the time it's just noise. So it feels productive. Taking more trades feels like progress, but usually it's just noise. You will get a dopamine rush from the instant gratification of trying to buy or sell something, okay? But most of the time, it's just the dopamine that's talking, and it's not the logic. So real progress and profits come from selecting high probability setups and not constant action. Now, I can tell you one thing. There is almost no strategy that will deliver you 5 high quality setups a day, okay? I don't care what kind of strategy someone tries to sell you, it isn't possible. So what you need to understand, when you're looking at the reality of day trading, sometimes for 3 days, you have nothing to do, okay? Literally nothing. You can get your Kindle and read some, nothing to do. Then the other 3 days, you have a lot to do, okay? It is like there is no every single day work in the trading space. It's basically waiting for the market to come towards you. One of the biggest problems people make is that they try to force their strategy into the markets. The only thing that you should do is put your strategy on the markets and now you wait until the market comes to you. If you are not doing this, but you are trying to force it in, you are basically running away from profits, okay? And this comes as well down to the next point, and that is why overtrading destroys consistency. Rule breaking, forcing trades makes you abandon your own system. And this is what I mean with a lot of people, they force their strategy into the markets. Instead of listening to all of the triggers that they need in order to go into a trade, they think, okay, I maybe just have 2 triggers of the 5, but at the end of the day, I didn't trade for 2 days. I need to make some money because I'm a trader. So now I'm just randomly going in. The biggest problem you have with this is that the costs will add up. So you have the spreads, you have the fees, and some small losses at one point. They make a big one, okay? I have a very simple saying. Treat your money right or it will find a new owner. What a lot of people do is they don't respect the money anymore. Why? Because they are in a rush. So they just want to trade. They just need to take action. One of the biggest problems with this is that you will have some small losses, okay? Because of this, you will have a confidence collapse. And this inconsistency ruins the complete trust in yourself and in your plan. So because you didn't stick to the strategy anymore, and you are basically lying to yourself, you now think that the strategy itself doesn't work anymore because you are making loss after loss after loss after loss. Most of the time, it is not the strategy that is wrong. Most of the time, it's you that is impatient, okay? So this is why overtrading destroys consistency. Now, when you're looking at this, patience as a trading edge. What I want you to understand, the moment when I went hard in trading was when I started to filter out the noise and I was skipping all of the mediocre setups, okay? So what I did is every single time, if I looked at a trade, I basically said, this thing right here, I respect it. Okay, this thing right here, it wants to stay with me. Am I just randomly going to give it now to a random person with basically no good sales pitch in order to flip the money? Or am I going to wait until someone comes with a real plan and then I will hand it over to him? This is how I started to approach the markets. The markets needed to basically convince me in order to jump in. Okay, this is one of the most important mind shifts I had. I had my strategy in place and I had all of the triggers in place. Every single time, I would just basically make a list of check marks. Okay, this needs to happen in the market. This needs to happen in the market. This needs to happen in the market. And this needs to happen. And if I could check them all off, that's when I said, there you go. Okay, if this didn't happen, it didn't get my money. It's simple as that. How I always love to view this is the sniper mindset. So only strike when the target is clear. How I always view it is people who just randomly take trades are basically people who have one target that they really need to hit. But what are they doing? Instead of picking the sniper as a weapon, they are just picking a random machine gun, okay? And they are just spraying and praying and hoping that the target goes there. Well, literally the only thing that you have to do is take out the sniper, have some patience, and only hit when the actual mark is there. So have a sniper mindset and only strike when the target is clear. Only strike when you can actually look at the checklist and say, okay, I have this one now, I have this one now, and I have this one now, and this is why I enter the trade. When you're looking at most people, they cannot do this simple thing. They literally all say, yeah, no, okay, but this influencer said this, so this is the reason why I went in. No. That's not part of your checklist. Have a very clear strategy, okay? The strategy itself needs to be bulletproof. So when I'm looking at my own strategy, it's a range trading strategy. Nothing is less emotional than range trading. If you want to know more about this, I literally have a free school below where you can see exactly the fundamentals of range trading and how I approach the market like a sniper, okay? Now we go to this one, and that is building discipline through control. Set boundaries, define when and where you don't trade. One of the biggest mistakes I see people make is they are just 24/7 traders. They trade during big news events, they trade during the weekends without understanding that sometimes the price action is just completely different. And sometimes the price action, it doesn't matter which strategy you have, is unreliable. So when we're looking at the markets during FOMC, when we're looking at the markets during CPI, when you're looking at the crypto markets during the weekend, you will have very different price action than just from Monday to Friday. So what a lot of people do is they just keep on trading no matter the circumstances. Know for yourself which moments the moments are when to trade and when not to trade. Why? Again, you are here to preserve your capital and respect your money. If you're just going to put it out there in a dangerous area, in my opinion, it's not the most smart thing to do. Muscle of control. Every resisted impulse strengthens self-discipline. It's basically just a step, okay? And it's basically just collecting the breadcrumbs. Every single time when you will be able to say no towards a unreliable trade that you wanted to do out of just emotion, is the stronger you become. The more you learn to say no, is the better you will become at it. It's very simple, okay? Less emotion, control will reduce the stress and it keeps you rational. One of the most important things in trading. Again, this simple checklist, it may seem very, very simple, but what a lot of people do is at one moment, it will be just self-fulfilling prophecy. And they will just form this target, okay, and form this checklist, while actually it isn't really there. That's why I have a simple rule for me. Can I send this to my friend who trades the exact same strategy, saying this trigger is clear, yes or no. If I know that the answer is no, then I won't mark the check mark, okay? Every single time I will ask myself, is this trigger so clear that he will see it as a trigger as well? Or did I form it because I'm an emotional guy who says, okay, I just want to enter the trade? This comes down to less is more. Quality over quantity. 1 A+ trade versus 10 B trades, okay? Quality compounds better than frequency. If you have 10 half trades, yes, so 10 where you just randomly said, okay, even though I have 2 triggers, I will go in. 10 of those, yes, 1 A+ setup most of the time pays you more than 10 mediocre ones. Why? Because this 10 is very inconsistent. And this is simply because every single time you step away from a strategy. I'm very honest, most strategies most of the time work. The biggest problem is that most people cannot apply their emotions towards the market. So they think that they are actually trading a strategy, but to be honest, they are not. So what you need to understand is when you're looking at the A+ setup at most strategies, if you just have normal emotions towards those, most of the time that one trade pays you more than 10 mediocre trades. So a professional standard, pros wait. Amateurs chase every single move. Again, a pro is the sniper who waits and says, listen, I need every single trigger. I need them clear. I need them checked by someone else who can look at it from a helicopter point of view. If this is not the case, and if I cannot send it to my friend, then most likely it's not the best trade out there. This comes down to clarity over chaos. Fewer positions mean clearer decisions and stronger results. One of my biggest things that I noticed for myself when I was in the markets is that every single time when I was just in one trade instead of 10, I had 20 times more clarity. Because if you are in 10 trades and you need to monitor them all, or let's say 5, you need to give your time to every trade and you need to trade them equally, okay? And treat them equally. Again, treat your money right or it will find a new owner. Make sure that when you are in a trade, you have most of the focus on just one setup. Again, when you're looking at most markets, most of the time you have one big runner, like for example in the crypto space, BTC, and in a non-bull market, okay, most of the time everything follows BTC. So one of the smartest things to do is just pick one pair and trade that one instead of trading 5 of them. Why? Because most of the time they have exactly the same price action. So you're not just in 5 trades, but most of the time you're in one big trade. If that one goes wrong, instead of taking 2% loss for one trade, now you have more than 10% because you spread it out over 5 trades, because you are now in one big trade. Now, let me give you some action steps, okay? I want you to ask yourself, do you currently have a strategy, yes or no? If the answer is yes, ask yourself, what do you define as an A+ setup? Again, if you don't have a strategy or you want to look at my strategy, just go to my free school below, okay? So what is a A+ setup? And you need to define it so simple that you can make a checklist of around 5 points, okay? Then you need to say to yourself, okay, let's say for the upcoming month, I'm going to limit my daily trades. So instead of having just randomly approaching the markets with, okay, this one is good, boom, my money, this one, boom, my money. No, say, okay, I'm only allowed for the upcoming month to trade 1 pair a day with 1 trade. This will make you way more careful about taking the trade itself, and it will make you way easier say, okay, wait, this one only has 2, I'm only allowed to take 1 trade, let me wait until I found the perfect one for today. And besides this, guys, learn to journal skipped setups without feeling guilty, okay? Sometimes it's better not to take a trade, but just have the RR like this on the screen and see if it actually played out, even though you didn't make money from it. Why? Because you are basically training yourself not to take every single position. A lot of people, they always feel guilty if it goes towards the next TP. What I always say is one of the best things that could happen is that it went to your TP. Why? Because it strengthens your ability in that strategy. okay? If it went to a stop loss, it would have been 20 times worse. Sometimes I see people paper trading and they get almost happy if it went to stop loss. What I'm always saying is it basically means that you suck at trading, okay? One of the best things is that it goes to here. Why? Because it should build confidence in your trading. Now guys, if you like these kind of videos and you want to see more of the reality of day trading, don't forget to subscribe to the channel and like this video. Again, if you want to see more of what I'm doing, just go to my free school where I explain exactly how I still make money every single day in the space. Ciao, ciao.